Almost 6 months ago, I put together a 25 stock portfolio because I wanted to see how that would perform against a FTSE All-World ETF. So in today's video, I am going to be breaking down the results for you. So obviously this channel focuses very heavily on investing in ETFs and index funds and investing passively because I personally believe, and research shows, that that is one of the very best ways to be investing. Research that illustrates this has shown that over 90% of actively managed funds underperform the S&P 500, which is those top 500 companies in the US. What I was trying to prove here was that, in fact, investing in ETFs and index funds is better than choosing your own individual stocks. And you'll be pleased to know that that is the result that I have seen. So let me share those numbers and percentage gains with you. And then after that, I'm going to go through the individual stock portfolio because some of the stocks that I have been holding have done phenomenally well. There is actually a stock in there that in less than 6 months has gone up over 100%. So I'll be sharing all of the individual stock performance with you as well. But to give you the top line figures where we compare the stock portfolio to the ETF, I wanted to let you know that if we were comparing it to VWRP, which is Vanguard's accumulating all-world ETF, that has gone up in value 8.12% in the same time that I have been holding on to these different stocks to compare it to. Now these figures and numbers are run from the 25th of June 2024 when I bought these stocks to today. So it's not quite 6 months yet, because if it was 6 months, this video would be going live on Christmas Day. And as much as I'm sure you all love the channel, I don't think you'd be wanting to watch it on Christmas Day. So in that same amount of time, so almost 6 months, the Trading 212 portfolio that I was holding of 25 different stocks has gone up in value 3.74%. So that's fine.
Totally fine. I don't know why it's coming out all loud and squeaky, because really, I'm fine.
That's acceptable, sort of what you might be getting in a high interest savings account in potentially a year. So it's taken half the time to increase in value by that. But I think this really proves the point that potentially investing in ETFs and index funds is better than investing in individual stocks. Now, if you were eagle-eyed and had a good look at the stocks portfolio when I flashed up the results for it, you would see that actually the stocks are showing up as being up over 17% overall in the last 6 months, which obviously looks very, very good, but you're not getting the whole story if you look at that, because actually, if you remember from my first video, for all of these individual stocks and shares, the plan was to buy them and hold them and leave them. But what I did do to curb my potential losses and just to have some risk management in place is set a stop loss for the different stocks at 20%. So if any of these stocks dropped in value by 20%, then that stop loss would be activated and they would be sold for me. So these stocks that I have left are the ones that obviously haven't activated the stop loss and haven't lost over 20%. So that's why that data is looking a little bit skewed. Now I thought it was really important to stress here that the majority of my investment ISA and also my self-invested personal pension are invested in ETFs. This stocks portfolio was simply for a bit of entertainment purposes. I wanted to see how it would perform against a FTSE All-World. So this isn't serious investing, and this was simply a little bit of an experiment. So don't worry about me. I'm not going away and buying very risky stocks and trying to beat the market. I understand that that is very, very hard to do, which is why I predominantly focus on investing in ETFs and index funds. Okay, so let's dig in and take a look at this stocks portfolio and find out which one of these stocks has actually gone up over 100% in less than 6 months. So the first stock is Amphenol, which now has a value of £10.54. It has gone up 5.51%. Their second stock is that huge winning stock. So that is Axon Enterprise. It has gone up 118.42%. So it has more than doubled in value in less than 6 months. Be interesting to see what the next 6 months hold for this stock. The next stock is Broadcom. This has gone up 4.5%, then Davita 6.41%, then Deckers Outdoor has gone up 23.45%. Then Dick's Sporting Goods is down 8.32%. Then Fair Isaac is up a whopping 51.34%. So that is pretty good considering it has been less than 6 months. It'd be interesting to see if it could keep that momentum going and get up over 100% in a year. Who knows if that is possible. The next one is Fidelity National Information. That's gone up 10.81%. Hartford Financial Services are up 8.11%. Iron Mountain is up a whopping 26.05%. Please remember this is in less than 6 months, so that is a very strong performance. Then Marriott International is up 17.54% and Progressive is up 16.42%. Qualcomm is down 23.92%, which makes me wonder why that stop loss hasn't been activated for that one. Yeah, I'm not sure what's happened there. I'll have a closer look at that. Maybe I missed setting my stop loss and did not do very good risk management for Qualcomm. We shall see if that's the case. The next one is Quanta Services, which is up 17.43%, and Seagate Technology, which is down 6.12%. And then the final stock that is left in this original 25 stock portfolio, but now down to 16, is Talanx, which is up 11.92%. Now, I'd like to hear what you think I should do with these different stocks. Do you think, which is probably what I think I want to do, is I want to sell them and then simply invest them in my investment ISA in a simple ETF. So there are a few ETFs that I like to invest in. One of them is the Invesco FTSE All-World ETF. It has really good low fees. Or I could invest it in something a bit more aggressive, like the iShares S&P 500 Information Technology ETF that I do have a fair amount invested in as well. What do you think? What do you think I should be doing with this money? I personally think it's better to take it all out. It was an interesting experiment. It proved a point that I wanted to make, but I don't think it's going to continue to do better than simply investing in an index fund or an ETF, which just goes to show that making investments in an ETF that simply tracks a market can often, and in this case, certainly outperform choosing individual stocks and shares. By setting stop losses and simply leaving this account to run for almost 6 months without making any changes, I did take away obviously that level of active management, which could have potentially meant that it could have performed slightly better, or potentially my mind could have got in the way. I could have seen that Axon Enterprise had gone up by over 100% and made the decision to sell that stock, or equally I could have held on to losers. There is actually something called the disposition effect, which refers to our tendency to prematurely sell assets that have made financial gains. So if I was seeing that something had gone up over 100%, I might have been like, quickly sell it, and then actually holding on to assets that are losing money. So sometimes psychology can get in the way. So sometimes it is better just buy an investment and to just simply let it run, let that money compound over time, let it see those gains rather than trying to get too actively involved with your investments. Now, this is something that's observed in many investors. So it's not just investors like, say, for example, you and me. This is something that often professional investors will do as well. Anyway, I hope you've enjoyed this video. I have enjoyed being back. I'm sorry for the little gap that I have had on this channel. Life sometimes just kind of gets in the way of things. But hopefully I will be back regularly making these videos. Please let me know in the comments down below what you would like to see from me next. Also, it would mean the world if you want to subscribe to this channel. I've been so pleased with the growth and I'm so grateful for anyone that is subscribed to this channel. I really appreciate it. Anyway, have a lovely day and I will speak to you soon. Bye bye.